Yesterday's retail sales report was much weaker than expected, with retail sales falling 2.5% compared to market expectations of a 0.8% decline. Stripping out the volatile auto component, core sales fell 1.6%. The strong fall does follow a sharp increase the previous month in September as consumers brought forward purchases ahead of the GST increase on 1 October. Indeed, looking at the areas that we saw the largest increase and then decline were big ticket items such as furniture and electronic goods, and we also saw quite a lot of volatility in department store sales. We expect that retail sales will continue to remain weak in November. Indeed, the underlying trend in retail sales, once we strip out the volatility associated with the GST increase, does remain very subdued. The market reacted quite strongly to the result, with the NZ dollar falling 0.5% against the US dollar and the Australian dollar immediately. We also saw swap rates drift 1 to 2 basis points lower following the release. The government released its half-year economic and fiscal update yesterday. As we expected, there was a large deterioration in the operating balance before gains and losses over the June 2011 year. This was a result of weaker than expected economic growth, which saw tax collection much more subdued and had to lower their tax collection forecasts over the horizon. In addition, the government had to make an allowance for the Earthquake Commission's $1.5 billion loss associated with the Canterbury earthquake. However, the big surprise out of yesterday's account was the speed in which these fiscal deficits do recover. This is a result of a much lower expenditure forecast going out. The government has trimmed back its allowance for interest rate costs over the forecast horizon. This is a result of a much lower bond yield forecast. There appears to be some risk with this forecast, as since economic projections were finalised, bond yields have picked up through October. The New Zealand dollar fell sharply following yesterday's weaker than expected retail trade report. It remained at low levels throughout the day. However, the NZ dollar received a boost overnight on stronger investor confidence. In particular, US retail sales proved stronger once again. US consumer spending has been much stronger than expected over recent months and proves the US economy is now starting to gain traction. Meanwhile, the euro also remained quite well supported overnight on the back of stronger German investor confidence data. In contrast, the pound remained quite weak as markets continued to focus on weaker housing market data and also concerns that public sector cutbacks are now starting to weigh on consumer confidence and spending.